Now, when we talk about technology, I personally am a big fan of technology itself, provided it makes us into a better individual in whatever decision making we are taking. And so, particularly in this industry, over the last, I would say, 25 years, technology has played such an immense role. I think financial markets and healthcare are the two sectors, two industries, which has got hugely positively benefited over the last 25, 30 years due to technology. Now, why am I talking about technology when I have a technical analysis or a chart open in front of me? That is because with technology, it tends to get better and easier, and there's this concept called pattern recognition. So, the patterns which we have read and understood theoretically in books, we need not actually put in our efforts to find them. The software can do it for us. Is it a good thing? Are there any pitfalls? What are the pros and cons? Let's try and understand with the help of the pattern recognition possibility that we have with TradingView. So here I have the daily chart of ITC futures, and in TradingView, when you come to indicators, there is right up here at the corner candlestick patterns. So you can click on all candlestick patterns, or you can select the ones which you generally like and prefer to trade. Now, I personally, based on my experience, believe that candlesticks have a 50-50 chance to work. Candlesticks have a pretty decent degree of subjectivity in them, and one should not trade candlesticks standalone. Why do I say this? Maybe this will require a different video from my end, but as of now, let's focus on how we can recognize a pattern without putting in the effort. So let's say we come to the engulfing bearish, we click on it, engulfing bullish, we click on it. Now we know that the bullish and the bearish engulfing are very commonly found patterns. They seem to be very sensible pattern, and they seem to work most of the time. So now, as we can see on this particular chart, the pattern recognition has recognized wherever there is a bearish or a bullish, and the bullish is with a cooler color, which is blue, and hot color red is used for the bearish engulfing. Now, are they all right? Is there any requirement for us to use our intelligence to justify, to check them, to verify them? Let's look at the. So when we plot these indicators, they when we actually put this pattern recognition, they are plotted as indicators up here. Okay. So for the time being, I'm going to hide the bullish. I'm going to focus on these two bearish engulfing results. So what do we have here? We have a red bodied candlestick. The body of the red candlestick is completely engulfing the green body, which is the previous, and there was a short-term rally before that, and even before that there was a decent sized rally. So this can be considered as a good enough of a bearish engulfing, because it has the uptrend, the red body is covering the green. It's the only fact that the very next day it gapped down, so it would have been really difficult to execute a trade based on this bearish engulfing. Now, if we bring our focus to this point now, yes, we have a full bodied like a red candlestick, which is completely engulfing, encompassing, covering the previous green body. But one very key essential point which is missing over here is, where is the uptrend? It's in a downtrend. In fact, if you read any classic theory about candlestick patterns, especially the reversal patterns, and in fact, if we keep our cursor over here, TradingView has actually given us a little bit detail about the pattern. And you can see that the very first line, at the end of a given uptrend, comma, at the end of a given uptrend. Where is the uptrend? It's a downtrend. And so when we use these pattern recognition facilities, when we have the technology to help us save our time and take better decisions, I feel that at times, for the sake of getting it done easily, we might miss out. We might miss out on the authenticity, in this case, the authenticity or the validity of the signal. And so over here also you notice that there are 3 bearish engulfing back to back. This one is still okay, though this was a pretty good of a shooting star, but this is on the verge of the fall. Now this cannot be a very good engulfing, bearish engulfing. That is because it's already started to fall with a very heavy gap down. And same logic goes here. Where is the uptrend? So I would still say this looks still okay, would have rather preferred to be right on top. That's how a typical engulfing shapes up. But these two are definitely not. This is applicable if you go for any of the reversal patterns. Now I have clicked on the engulfing bullish. Now if we keep our cursor, what does it say? At the end of a given downtrend, right? So at the end of a given downtrend, this is a decent enough downtrend. This is a red bodied candlestick and the green body candlestick completely engulfing the previous red body. So this is a decent recognition of a bullish engulfing. Prices, however, did not go above this bar for us to trade. On the contrary, it came down. So you get the picture. You get the understanding that the ease of finding the pattern and the flip side. So whichever are your favorite candlestick patterns, after the software figures it out for you, finds it out for you, please put in a little bit of effort to verify that yourself. Make sure it is confirmed by other sources of information, like maybe indicators supporting your anticipated direction, and then take the trade. Please do not take a trade standalone based on candlestick patterns. Now, this particular reasoning, this particular instruction or suggestion that I'm sharing with you is applicable for reversal patterns. But then if you just click a neutral pattern like a doji, now doji does not need to be in an uptrend or a downtrend or a sideways trend. Doji is just a doji, wherein the open and close are extremely close to each other. And so doji can be found out. It's just that I have personally not found any strong evidence to trade based on a doji, because doji can be signs of consolidation which leads to further upside before, after a rise, and doji can at times lead to a reversal where an uptrend can come down. So I don't think doji can be categorized as any of a continuation or a reversal pattern. Doji is just a doji, which means it is slowing down. The rise or the fall is going to slow down. And after the slowdown, whether it's going to continue or whether it's going to reverse, doji doesn't have that information in itself to tell us whether it will continue or reverse. The price is the one which will suggest so. So the requirement of verifying the pattern depends on what kind of a pattern we are trying to recognize from the chart. Let's quickly do a couple of more, and then I think you'll get a far better understanding. I've never actually clicked on all candlestick patterns. Now, as I create this video for you, I feel this, urge to, let's see, how does it look? So when I click on the all, and now the good thing is over here, detect trend based on. See, over here what has happened is it will find those patterns based on the moving averages, or we can select no trend. So it will find out much more. So let's see, that's not a bad thing. It will find those patterns when it will consider price above 50 SMA, it will consider it to be an uptrend, and when prices are below 50 SMA, it will consider as a downtrend. That's not a bad thing. And though we have checked on all patterns, still it has not checked all of them. So I will take the liberty to click on few which I personally like the Harami cross, the bullish and the bearish Harami pattern. This is probably one of the most powerful patterns. I think so. Piercing and the dark cloud cover is also a decent pattern, which is almost like an engulfing, and the tweezer bottom and the tweezer top. So let's see what we have. Let's do an OK. So this is giving us a relatively better signals, better recognitions. A beautiful bullish Harami pattern. Beautiful. Doesn't actually get better than this, does it? This is also pretty nice. Nice downtrend, red body candlestick, the small green body inside the previous one, and immediately it picks up. Immediately. As I was saying at the beginning of this video, that I feel that these candlestick patterns are really good for short-term trading. And why I think so, maybe I feel it as I prepare this video, I feel that there's a need for another detailed explanation on this conclusion of mine, that they are good for short-term trading only. Let's look at this dark cloud cover. Now this is also a pretty good looking dark cloud cover because it had an uptrend. It's just that it did not break below the previous lows. So I think now it's doing a better recognition when we have checked on the moving average thing. Then it is recognizing it better in terms of the trend, though the trend is now defined by a 50 SMA and not visually falling or rising. This is also a piercing line which didn't actually pick up at all. In fact, it fell further down. We have a few patterns, and the good thing is if you don't remember which ones you have checked on, just put in a cursor, and that's a tweezer top. We can see these two lines, two highs exactly close to each other, and then we have a tweezer bottom also. Tweezer top, tweezer bottoms, dark cloud cover, and all these patterns are possibilities. They are not trade by themselves. Please do understand that, okay? This is dark cloud cover. This is too big of a dark cloud cover. Both the candles are pretty wide, so not the very best of patterns. So this is, I think, is a better option than clicking on the individual patterns. I had not checked it myself before, but if we go back to, let's say, an individual engulfing bearish, if we go to the settings of that, does it allow us any moving average? Yes, it does. Detect trend based on SMA, but that's not good enough. It's not good enough. I would suggest, even if you put a trend based on 50 SMA, or so it doesn't have an option for us to change the moving average. It would have been really good if they update this, letting us decide at least the moving average based on which we want to decide the trend. But nevertheless, 50 SMA, we will take it. Still, I would say, whichever patterns you're trying to find out, continuation or reversal, do take a look at it, do vet it out visually, and then go for the trade. And before you go for the trade, do not trade singularly based on just the candlestick pattern. Make sure you have other technical evidences to support it. I hope this was useful for you. If you've been using this pattern recognition on the TradingView for the candlesticks, do share your thoughts and your experience. Thank you. Take care of yourselves. Trade well, trade wise.